In this episode, I'll talk about how you can double your money in less than 2 years. Sounds a bit salesy even when I say it out loud, double your money in less than 2 years. But honestly, I'll use examples from my own portfolio and basically give you a location as well where you can pretty much double your money in less than 2 years. And I'll also talk about, and this is something that's really like a passion of mine because most people don't know about it, it's really telling you the truth about inflation that no one talks about. And I know inflation might be rearing its ugly head again. Some people are saying there might be another interest rate rise. As a property investor, okay, I actually welcome it. And I'll tell you, it seems super counterintuitive, I know, but I'll tell you why. But honestly, I don't think or I don't hope that interest rates rise again. But the more inflation happens, it's better for property investors. Actually, let's start there and then I'll go through how you can double your money secondly. So the truth about inflation that no one talks about, like while the crowd, like most people see inflation as a villain, I'm trying to flip the script, at least for property investors. Inflation is not your enemy. It's actually your most underutilized ally. The common narrative about inflation, it shouts from the rooftops. It talks about caution. Whenever the interest rate, or rather, the inflation rate is above the 2 or 3% band in Australia, everyone's like really concerned, right? That's been what's been happening for the last 2 or 3 years. But I advocate leverage, calculated leverage for both myself and of course my clients. And yes, the inflation rate is higher than we'd like, but that's precisely where your golden opportunity, guys, lies. Inflation, when you deal with it properly, it can actually accelerate your property investment gains and your monthly returns. So although it's a bit of a contrarian approach, like I get that, most people they don't get this, they don't believe it. But here's 2 things that you should know. Assets like real estate, they rise faster when there is inflation, when there is rampant inflation, at least in Australia. And this is because it's a hard asset, okay? And one of the best hedges against inflation. Hard assets, because they have intrinsic value, that's what people run to when inflation is running rampant. Just look at Zimbabwe. And the second thing you want to know, you really need to understand, is that debt erodes faster with high inflation. How does that work, guys? It doesn't make sense. This is because your loan is worth less tomorrow than it is today, even if you didn't pay it off, because money is losing value. That's the definition of inflation. So even if you have a $500,000 loan, in 5 years, after 5 years of inflation, even if you didn't pay it off, it's worth less in the future than it was at the start. So debt is your friend. Good debt, not to buy a motorbike or travel the world, but good debt that has a return on its investment. So investing in property is a double whammy. Okay, you both get high appreciation in your capital asset, like real estate, but also the debt that you use to buy that asset, it goes down, it erodes. Okay, it's like inflation is a wind, and over time it's eroding that rock surface, okay, or that cliff's edge. That's a good thing for property investors. And so it's no wonder property prices have boomed in the last 4 years, and almost every other time when it's been inflationary in nature in the last 30, 40 years, 50 years, property has boomed. Okay, every time there has been rampant inflation. So for an opportunist, okay, this is a pretty big opportunity, or it could be a turning point. All right, so if you really want to seize this opportunity, whether it's your first property or you want to scale your portfolio, okay, do it, start it while high inflation is still here. Okay, and let's let's sort of pivot to the second part of this episode, where I want to talk about how you can double your money in less than 2 years. And by the way, inflation is still still going high. I personally don't care if interest rates go up again or not. For me, I want to make the most of the opportunity that current inflation is providing me, because if I don't make the most of this opportunity, if I'm one of those people who thinks doomsday is coming, judgment day is coming, there's gonna be some sort of thing that just completely wipes property values, then I'm always on the losing side, because history shows us, like I've just illustrated, that inflationary times, okay, if you think interest rates are going to go up, there's going to be another sort of rearing of its ugly head of inflation because of services inflation, because of oil prices, whatever, then that's even more reason to invest in real estate right now. And that provides a sort of tailwind for what I'm about to say. Now, to give you an idea of my own portfolio, not to brag or anything, because bragging is just vanity, but I'm using this to prove a point. There are some properties I have right now that I've bought. I mean, overall 12 properties, sorry, I don't want to make that up. 13 investment properties over the last sort of 12, 13 years. Some that are kind of stagnant right now, like Newcastle, ones in Tassie, they've more than tripled in the time. But then there are others that are going up a lot right now, and that's the value of having a diversified portfolio. You're always, every single year for the rest of your life, there are areas where your wealth is multiplying, okay? It's going up. And that's what you can get if you have a diversified portfolio across Australia. And I noticed when I was doing these revaluations that my properties in Brisbane and also like Cairns, a lot of Queensland property, I mean, some others as well, but a lot of Queensland properties, they were going up a lot. And I thought, I need to talk about this. Like, for example, I have 2 properties in Brisbane. One is, I bought it when it was under 500, but now it's kind of like touching $1 million. And a year ago, it was, I think, like 850. So that's $150,000 in 1 year. Another one, I think, is about, it's on the middle ring, Brisbane. It's kind of, I think, about 600,000-700,000 now. But just a year ago, it was like 550. And so, here's another, and then I have one in Cairns, which was kind of a mistake at the time, but it's come into its own now. In the last year, it's gone from being about 500 to like well above 600 now. And so let's just take these 3 examples, and let's say you had invested in these locations 12 months ago, like I've demonstrated. So Cairns, okay, Cairns, you could have bought $500,000. You could buy my property 12 months ago for $500,000. Okay, so how much capital would you need to put down to buy a $500,000 property? 10% deposit, let's say, but a lot of you will be like, oh, that's a lot of leverage, okay? So, but let's just go with 10%, maybe a little bit more. 10% would be $50,000, and then you could say a little bit more, so 12%, sweet spot with LMI. 12% deposit, let's say you needed $60,000, all right? Plus, of course, stamp duty, that takes up to $70,000, $80,000, let's say $80,000, right? To be on the safe side, with legal transaction costs and a few bits and bobs that cost a few $100s, $80,000 to get into that $500,000 property. Like I said, this is not speculation. This is actually one of my properties I've had since 2015. It's gone up from about 500 to about, 650, around there. So if you bought that 12 months ago, bought it for 500, and it's gone up to 650, that's $150,000 gained. Now, of course, that's not 150 profit that you could get if you sold it, because you need to pay capital gains tax, you need to pay, like a whole bunch of things, agent fees, etc., legal fees. But the equity is 150,000. Now, if you only needed $80,000 to get in, and now you've made 150, I know that 80 times 2 is 160, so I'm 10 shy, but within 12 months, that's basically doubling your money, right? That's doubling your money without a national property boom. There is no national property boom right now. It's not like on average national house prices going up by 10, 20%. That's not the case. But this location, you would have doubled your deposit, your capital required, doubled your money in 12 months. Same with Brisbane. Like, let's use that example. The property that I had that was worth about $550. Now it's about $650, let's say $650, $700, around that sort of Peachtree area. That location is so good. I still think going forward, I mean, would I buy that right now at this point in time with the yield the way it is? Probably not. But the point remains. You could have bought that 12 months ago, a little over 12 months ago, sorry, that's my son inside. I'm in my backyard, by the way, just chilling. You could have bought that 12 months ago for, you would have needed $70,000, $80,000 to get in, and you would have bought that for 500K. Now it's 600, 650, much like the cans one. You've almost doubled your money within a year. What to speak of 2 years, it would go above that double 2x type multiple. The one that I have in Brisbane that's worth almost $1 million now, it was kind of like 900-ish a year ago. To buy a 900K property, not that I advocate needing to buy such expensive properties, it was less than 500 when I bought, I think 496 in 2016, if I'm not mistaken. You know, that property, if you bought that 12 months ago for around 900, you probably would have needed, let's say, $150,000 to get in, between 150 to 200,000. All right, so it's gone up about 100,000. Give it another year, I think it will definitely go up another 100, 150,000. Once again, you've doubled your money. Okay, you've created that 150 to 200. It's made another 150 to 200 within 2 years. That is the beauty of property investing. I know everyone says you can leverage stocks. You absolutely can leverage stocks to 80%, to 100%, to 1,000%. But tell me this, how many average Australians actually leverage stocks? You can, but how many people have that risk appetite? Because the upside and the downside risk is huge in stocks. It's so volatile, anything can happen, but property markets are more predictable. Okay, you can use data like stock on market, like days on market, like affordability, you know, like really technical trading month to month. You can see what's at the bottom, and you can actually double your money in less than 2 years. So if you combine these two principles, using this inflationary environment, not as something to be scared of, but something to be seen as a tailwind to our wealth creation, and then using this concept of using data to double your money. You know, this is exciting times that we live in, and so many places around Australia are so hot right now. I would really encourage you, if you have the capacity, okay, I'm not spruiking it, you don't have to do my course or anything, but I just don't want you guys to miss out, because those of us who have been in the industry, we see this as an exciting opportunity. I want you to go, you know, like head first into the pool, head first into the real estate market to either start or expand your portfolio. You won't regret it. You know, the market is so hot, and in these times where, you know, properties are flying off the shelves, of course, in some locations, not everywhere, like Perth, Adelaide, regional Queensland, Brisbane, etc., they're flying off. I really highly also recommend not to use a buyer's agent, because especially in times like this, people are tempted to buy a buyer's agent because it's a hot market. But these buyer's agents, they just sell you anything, and they overpay for it, because you as a client, you're not educated, you don't know what the true valuation should be, and they sell you a property just to get through you as another client so they can go to the next one and the next one. There's no accountability, and in a hot market they'll say, well, look, you know, PK, you've got 12 hours to decide because someone else is going to buy it. You know, if you've used a buyer's agent, you're nodding along, because you know this is their tactics to get you into FOMO regardless of what the true valuation is. So especially in times like this, you have to DIY to avoid overpaying. You know what I'm talking about if you're trying to buy in Perth right now. Anyway, I won't waffle on. All in on, inflation is a good thing, not for the economy long term, but short term, it's an opportunistic way to really get a tailwind behind you to start or accelerate your property investing. And there is no excuse right now, especially if you're buying in parts of Perth, Queensland, you'll be doubling your money in the next 2 years, or if you buy well. Guys, hit the subscribe button, give it a like. I really do want everyone to learn this, to share it with someone who's kind of skeptical on these things, who kind of maybe, you know, thinks all these things are things talked about by property spruikers. But honestly, you can Google me and my portfolio, and the entire portfolio is there. You can do your own due diligence as to whether I'm telling the truth or not. Anyway, guys, hit the subscribe button, turn the notification bell on, join my Facebook community, more than 50,000 amazing people, Australian Property Mastery with PK. A lot of those people are doubling their money in 2 years and using inflation not to scare them to sleep, but to motivate them and catapult them into action. I'll see you next time. See ya.